So good afternoon and welcome to this Valuation Standards Conclave being organized by ICMAI Registered Valuers Organization. Even though some more participants are still joining, I think the number will be quite large very soon within next 5-10 minutes. But then let's start on time. It's 4 o'clock. I'm going to start the event. On behalf of ICMAI RVO, we heartily welcome the chief guest of this program, Shri Rajesh Kumar Gupta ji, Chief General Manager from Insolvency and Bankruptcy Board of India, who has spared his valuable time on a Sunday to join this program for us. Thank you so much, sir, for joining us. We also welcome Mr. Alexander Aronson, who is the Technical Director of Tangible Assets at the International Valuation Standards Council, UK. Good afternoon, Mr. Alexander. It's a pleasure having you on this forum virtually for your deliberations on valuation standards. We are hugely thankful to you for sparing your valuable time.
Shukriya.
Namaskar. We also thank CMA Rakesh Singh ji, who is the chairperson of ICSI Registered Valuers Organization and also chairman of the Valuation Standards Board of ICMAI Registered Valuers Organization, who in spite of his very busy schedule has gracefully, thankfully agreed to our request and he is attending this program as the guest of honor. Welcome. We have yet another guest of honor, Mr. Shyam Agarwal, who is the chairman of ICMAI RBO, who because of certain other commitments could not make up this program, but in absentia, we really thank him for organizing and guiding us through organization of this particular conclave today. Then we are also thankful and we heartily welcome the two speakers of today, Mr. Ankit Goyal, he is Chartered Accountant, Registered Valuers. Sir, we welcome you and we look forward to your very knowledgeable deliberations as always in this program as well. We also welcome CMA Madam Padma Ganesh, Registered Valuer, who will also be speaking in this event on a particular theme chosen by her. So with this introduction, I think let's begin with the program. We all know that we are living through very volatile, dynamic, and very challenging times. It's not only on account of COVID-19 pandemic situation, but even otherwise, over the period of last about 2 or 3 decades, all of us have witnessed huge changes taking place in the way we live our life as well as the way we do and conduct our business. The business environment has changed devastatingly in terms of technology, in terms of customer expectations, in terms of dynamism, in terms of competitiveness, in terms of awareness towards climate responsibility, and also the social commitments and the societal responsibility of the business that's generally termed as the CSR concept. Now, it's a VUCA world wherein we are living in, which is highly vulnerable, very uncertain, hugely complex, and very ambiguous. And in such a business, we find many of the businesses which have a profitless turnover. They have a good enough top line, but end of the day, there's no profit available with them in terms of accounting. Or we have businesses which have cashless profit. They might have a good enough bottom line, but end of the day, there's no cash or liquidity available in the business. But when we look at the valuation of these companies, wow, skyrocketing, soaring very, very high. The point that I'm trying to make here is that today, the success mantra for a business anywhere in the world, any part of the world, is of course you got to create profit. You got to have profit to be able to sustain in the market. But end of the day, what the stakeholders are today looking at is value creation. Are you creating value for the stakeholders or not? Are you preserving that value for the stakeholders or not? And are you able to enhance that value going forward on a sustainable basis? That's the success mantra for any business today. Look at the Zomato IPO case study. I mean, Zomato had a top line of 2,700 crores, current year loss of 2,300 crores, has an accumulated loss of 4,600 crores, and the share price, the price at which it got listed initially was 75 rupees, and it is currently trading at a price of something around 145 in the stock market. And the issue was oversubscribed 38 times. That's what the people today look for. They do definitely look for the past. They definitely look for the history of a company, but more so, they are interested in what is the value that this particular business can generate going forward. And therefore, we define value as what is value or what is valuation. Valuation is an estimated value of future economic potential benefits that can arise from an asset or that are likely to accrue to a business. That's how we define valuation as. And as rightly said, valuation is not only about numbers. It's not simple input output. You have the financial statements, you have the projections, you put them in a financial model, you do Excel, you do spreadsheet, and you get the value. It's not, unfortunately, as simple as that. Because valuation involves a whole lot of judgments to be made. It's very, very subjective. Whole lot of biases come into the play when you carry out the valuation, because end of the day, after looking at all the available information, you are ultimately going to project the value for business for future, and future is always uncertain. You really don't know how the future is going to pan out. You really don't know how the business will unfold in future post COVID-19 pandemic situation that the world as a whole is facing, and therefore valuation is and will always remain a challenging assignment, a challenging task. So some people say that valuation is a science. Some other people say that valuation is an art. I think I use another third term to describe and describe valuation. I believe that valuation is both. It's an art as well as a science, but more so, it is more of a craft. You look at numbers and then you try to connect the dots, how you weave a story around those numbers. And then end of the day, after crafting up the story, how you sell that story is how you get the investors interested in your business. That's the mantra that we have in valuation. And then you can't have a precise value for any business asset. I mean, two valuers valuing a particular company or a particular asset are always going to come out with two different numbers. Maybe within the same range, of course, yes. But they are definitely going to come out with two different numbers because value lies in the eyes of the beholder. It differs from person to person. It depends upon his perspective, his perception, his judgment, his assumptions, and it all depends upon a whole lot of other factors. That's where the valuation differs from person to person. And the whole idea of valuation standards, as developed by IBSC, is also developed in India by the Institute of Chartered Accountants of India, is to provide credible valuations by building up trust, by building up confidence, and by building up the reputation of the valuation profession so that people know that the valuation has been carried out in a particular assignment by looking at certain fundamental principles which are consistently applied. So that's why we apply the method of precedent transactions approach. That's the market approach to valuation. We rely upon precedent transactions approach only and due to the fact that we assume and believe that everyone today uses some kind of standards for carrying out valuation, and therefore the valuations are more or less consistent across sectors, across different companies, at least belonging to the same set of business and same line of business. So, in order to deliberate on the aspect of valuation standards in terms of what are the objectives, what are the principles of standards, as well as what are the new areas wherein there is a need for creating standards, we have the two speakers, and we also interact with the open house during the question answer session. We will interact with the audience and the participants also, so that we can take a cue as to what are the expectations of various registered valuers in the marketplace with regard to development of new standards, and also the need for development of technical guidance notes. ICMAI RBO has already come out with drafts of two technical guidance notes on valuation standards. Hopefully soon we will come out with more as well, because the Valuation Standards Board is headed by today's guest of honor, Shri CMA Rakesh Singh sir. With these opening remarks, I should straight away start with the program. Thank you very much, all of you, for joining us, all the guests, all the participants. I would now request CMA Shri Rakesh Singh, Chairperson of ICSI Registered Valuation Organization, as well as Chairman of the Valuation Standards Board of ICMAI Registered Valuers Organization, to share his perspective with regard to today's deliberations. CMA Shri Rakesh Singh.
Thank you, Dr. Gupta. I hope that I'm audible, and that being confirmed. So let me first of all say a very, very good evening to everyone, and welcome to this conclave. Special welcome to Alexander, Technical Director of the IVSC Tangible Assets. Of course, I would have loved to see Shyam Agrawal, Chairman RVU ICMI, and my younger brother. But I can understand he has got some issues. And before I say anything, I from on the behalf of RVO, on behalf of the Institute and all of you, I would be starting by saying Om Shanti, because one of the director's father, Mr. Vijender Sharma's father, expired yesterday. I attended his last rites in the morning. So from all of us, we pray that his soul rests in peace. And now starting with what Dr. Gupta said and taking it from there onwards. In the last one of the programs when we were discussing, I made it a point that now the government of India is coming out with the monetization program, and pandemic going away with the kind of massive immunization program launched by the government of India, with I think maximum numbers of medicines available in India itself, and especially coaxing locally. The third wave or the so-called fourth wave and third wave may not be very right to say that they will be actually coming in, because we will be defeating it. So that was a perception last time. And I was of the very firm view that if the pandemic we can somehow maneuver and escape from that to some of the European countries, and even in our own country, some of the states are still not able to deal with it. If that thing we take care, I think India is on a situation on the verge of or a cusp of such a massive transformation that when it starts, we should not get caught by the changes. And look at the situation. Dr. Gupta was mentioning about Zomato. But what we fail to understand is, and including Zomato, that Zomato was not an exception. What we have to look at is the overall picture. Look at a situation till Friday. The Sensex going 60,000 plus now. Who had imagined? People used to talk whether it will be 16,000 or 17,000 a couple of years back. Today, Sensex is at 60,000. And what is the range? If you start a range, it goes into multiples of 9 up to the multiples of even 38, 38, 39 in some of the shares. Now, this kind of a massive investment, massive inflow, and the valuations taking, how do we deal with it? The second point is, if you look at it, even the Companies Act, the kind of changes, transformation, and the tinkering with the rules, what the government is now doing, especially under the Companies Act for all of you know that now it is the Companies Act under which actually the profession of valuation has now come into an umbrella, sort of a regulatory mechanism has been put into place. But again, I am of the firm view that the real potential has not yet begun. It is only the national stage at which I think in the last 3, 4 years, out of which you can straight away say 2 to 2.5 years, uh, gone by pandemic, and we have not been able to do it the way we could have progressed. But now the situation is changing so fast that now we have to take it head on. Otherwise, we will be left behind. So I'm coming to the main position of valuations and its concepts and its importance. Let me first really congratulate Dr. Gupta for making a bridge with the IVSC. Because previously, when I was heading the Valuation Standards Board in another organization, I started my communication with IVSC, and I wanted a nodal place in our own country linked directly with IVSC so that we can advocate, we can, our give our expertise, because all of us know that India is a very complex country, and also we have got very complex business models. So unless we have got IBSC behind us, we won't be able to carry it forward. Of course, we can, but the point is how smoothly we can do, how easily we can transform, and how the expertise, the experience of IBSC, how we can bring it to our own country and our valuers. That was the primary aim. For some reason, there was a gap, and I'm really thankful to the ICMI to once again giving me charge of IBSC. We had our, not IBSC, Valuation Standard, but possibly, of course, that's not an impossible task. Technical director is here. But of course, I don't want to take the place of IVSC. I'm happy with the VSB of ICMI. We have already have our first meeting, and like Dr. Gupta said,
Yes.
that we have started our work on the guidance notes and best practices. Some of the standards more or less coming on a final stage. And the best part is that now we have got industry representatives with us. Now we have got very big professionals associated with us. And we feel that now with the kind of industry acceptance and having a leadership position, now we have got a bounden duty upon us to now educate our valuers and make them comfortable with these standards, because making them comfortable is the first point before these gets accepted for the end users. I remember a long time back when I was being made the chairman of the Cost Accounting Standards Board. Someone referred about accounting standards, and he said, in India is a country where we love cricket so much, and we always talk in the language of cricket and everything. So somebody, a senior member of my board, said that standards are something, if you try to explain in the language of cricket, where there used to be a Coca-Cola ad. So they used to say, uh, you think cricket, you sleep cricket, but you drink Coca-Cola. That was type of an advertisement which was there. So he said, for the standards, basically, you talk standards, you eat standards, you drink standards, you sleep with the standards also. That's the kind of passion you must have regarding standards in order to execute your performance, because that performance can make a lot of difference. Now, accounting standards and cost accounting standards, I'm just referring as a point the importance about the standard. But in valuation standards, let us understand your perception, your interpretation, and your endorsement makes a huge lot of a difference, because the kind of values which you are going to have or deal with, they are so huge in nature that small mistakes can cost the end users a lot. So the whole idea is that as much as possible, we have to learn with the help of course, the IVSC, which is the parent body for all these standards, and they can guide us. Our expertise in performance and their expertise in having the knowledge base and the kind of work they are doing combined together, we can do we can bring a lot of benefit to India jurisdiction, and especially when India is now on the cusp of getting into a massive developmental and transformation system. Of course, IBBI is there to help us out. IBBI, I thanked it. Mr. Gupta also, Rajesh Gupta also, he has been in past always supportive. He has been in the programs. And I understand that now ICMI is the link between IVSC and IBBI. And I think that Dr. S.K. Gupta is one of the best, resource persons who can actually do it. And just not going more or not dealing more with the technicalities, because I've already got two speakers, 2 + 1, 3 speakers, and of course, representative IVSC. But only to inform, we have discussed that now we have specially allocated a place in Noida, where we will be developing one of the biggest resource places, including all the books, library, technical materials, and as a library for all the valuers who can participate there, and also a boardroom where VSB will be finding its technical material, and we'll be discussing that, which will be, it will have all the ebooks as well. So we are already discussing that. In fact, the work is already going on, and hopefully by second week of October, just after Dasara, we can start with some of the things. With this, I have my good wishes to all of you, and I hope that this fantastic work being done by Dr. X. Gupta, and then especially the linkage which he has established between IVSC and India, and a bridge between IBBI and ICMI, and the kind of leadership positioning now we have taken, we will be there to help all other RVOs also, and have a more and more interactive sessions with IVSC. And I request Alexander, on behalf of all the registered valuers, especially India jurisdictions, that you make a point. Of course, it's all depend upon how the travel plans are going. Whenever you are here, we are always to welcome you in India, and we'll love to have you here. And that's all. I think we'll continuously be in touch with you. With all my best wishes to all the participants. Thank you, Dr. Gupta and Rajesh, for being here and making me part of this program.
Thank you so much. Thank you so much, Rakesh sir, for giving us the encouragement, and under your guidance and leadership, we shall definitely carry on our agenda as you briefly prescribed and described in this session. We are definitely going forward in close association with IBSC as well as IBBI, and keeping all the stakeholders also in the loop. Along with that, continuously will continue to strive to bring about better standards and better technical guidance. Now we have the special guest of this program, Mr. Alexander Aronson, the Technical Director, Tangible Assets from International Valuation Standards Council. We have a very close association and relationship with IBSC on two fronts. One is that ICMAI RBO is an academic member of International Valuation Standards Council. And secondly, I'm personally a member of the Membership and Standards Recognition Board of IBSC. I've been selected, nominated by way of an open advertisement after a very thorough selection process conducted by IBSC. And now, personally, I am also a member of the Membership and Standards Recognition Board of IBSC. So we have a very close linkage. We are closely working with IBSC. And this is the time where I request Mr. Alexander Aronson, thanking him once again for being with us, and to please start his presentation. Mr. Alexander Aronson, please.
Thank you. Namaste. Thank you very much for the honor of inviting me to this valuation standards conclave of ICMAI. And I also look forward to working with Dr. Gupta in the future and discussing and working on the membership standards and recognition board. So if you can just bear with me a minute, I'm just going to put up my presentation. So bear with me and hopefully you can all hear me. So hopefully now you can all see my presentation. And I'm going to tell you a little bit about the International Valuation Standards Council and also give a brief overview of the International Valuation Standards. Now, I would be happy in future to provide a more detailed technical presentation, but this is more or less a bit of an introduction in terms of what we do and about the International Valuation Standards. So the first question is, who is the International Valuation Standards Council? And we are the global body responsible for developing and setting international valuation standards, and we encourage development of the valuation profession worldwide. We are independent and not-for-profit. We rely on our fundings from members, regulators, governments, and valuation professional organizations and corporate sponsors. And the valuation standards cover every aspect of valuation, which I'll be going into a little detail in a while. So that's tangible assets valuation, business valuation, and financial instruments. And we work with many partners, including IOSCO, who are the international regulators who have set up a joint board with the valuation standards boards to look at harmonization and adoption of incorporation of the valuation standards. We work very closely with IASB, who issue the International Financial Reporting Standards, with IASB, IFAC, World Bank, the UN, and financial regulators to build trust in valuation and help develop the global financial system in the public interest. From our point of view, international valuation standards are increasingly applied in different markets around the world and have been increasingly adopted. Looking just at the structure, we have a board of trustees, an overarching board of trustees. The chair of the board of trustees is Alistair Darling, who was previously the Chancellor of Exchequer. We also have the previous Chancellor of Exchequer of Singapore. We have senators. We also have many sort of regulators, members of the World Bank and other high industry leaders as members of our Board of Trustees. And underneath the Board of Trustees, we have the Membership and Standards Recognition Board, which Dr. Gupta will be joining and will very much be looking forward to his input and his input on behalf of India and the Indian markets as well. We have the Advisory Forum, which represents all our member organizations and gives feedbacks to the various IVSC technical boards. And we have an overarching standards review board that oversees all our technical standards. And underneath that, we have the tangible assets technical board, the business valuation board, and the Financial Instruments Board. And the boards are comprised of global valuation experts from across the world. In Indian representation, I sit with Sandeep Kumar Deb, who's a member of the Tangible Assets Board. They lead development and the public consultation on the standards, and they meet regularly, normally on a monthly basis, though we do have additional working group meetings to review and propose updates to the standards. IVSC has over 173 member organizations, of which ICMI are a member, and we have professionals applying valuation standards in over 103 countries. Collectively, the VPOs across the IVSC network accredit more than 340,000 professional valuers. And from our point of view, valuation professional organizations and organizations such as yourselves are integral to our network of stakeholders. They qualify professionals, set rules, and they provide training. So I'm going to start off telling you a bit about the international valuation standards. And I'm going to use the example of cricket because it's been mentioned a lot today. It's a bit like the rules of cricket. It tells you the rules of what you have to do for the valuation standards. It doesn't tell you how to play the game. It doesn't tell you how to value, or in cricket terms, it doesn't tell you how to play cricket. In fact, if it did tell you how to play cricket, maybe England would be slightly more successful against India in future cricket matches, but there we go. So looking at the international valuation standards, what we have is general standards which give everything that the valuer needs to know from his initial valuation to his final report. And it covers scope of works, investigations and compliance, reporting, basis of value, which include both IVS defined basis of value and IVS non-defined basis of value, such as IFRS 13, and it deals with valuation approaches and methods and looks at the income cost and the market approach. Now, in addition to the overarching general standards, there are more specific standards for each of the asset classes. So if you were a business valuer, you would be referring to IVS 101 to 105. That's all the general standards. And you would probably also be referring to IVS 200, which is the standard for business and business interests, and IVS 210, which is the standard for intangible assets. And just moving forward, not as quickly as I wanted to there, the slides seem to be moving too quickly. First of all, looking at business valuation and intangible assets. Well, what does that include? It includes the valuation of businesses, non-financial liabilities, goodwill, brands, intellectual property, inventory, environmental, social and governance, which is an extremely important topic around the world nowadays. In fact, we've seen a fall in some businesses' values who are seen not to meet ESG criteria, and marketing and customer lists. And looking at the relevant chapters separate from IVS 101 to 105, which is the general standards, the business valuation chapters within IVS are IVS 200, business and business interests, IVS 210, intangible assets, IVS 220, non-financial instruments, and IVS 230, inventories. Now, this is inventories from a business perspective. There will be a future chapter on inventories for tangible assets that would be looking more at development properties in the process of construction. And I've shown here a range of some of the projects that the Business Valuation Board are working on. It's by no means an extensive list. Obviously, there's the topic of environmental, social and governance, and we've recently issued 2 perspective papers of that, which as IVSC member organizations, you can download from the website, or I can always supply them to you afterwards. Goodwill, We've also recently issued a perspective paper on internally generated tangibles. Internally generated tangibles can make up to 70% of a business's value, but often they're not included in the accounting process, and negative interest rates. Now, looking at the tangible assets board, tangible assets is far more than just real estate. It also looks at personal property, art and antiques, plant and machinery, equipment, development property, biological assets, and land. And you can see here the current relevant chapters. There is IVS 300 on plant and equipment, IVS 400 on real property interests, and IVS 410 on development properties. And we're facing a number of challenges at the moment. We've noticed that there's an increasing use of automated valuation models in all markets, and I believe including India as well. There is not always the data to back up those valuation models, so we will be looking at doing standards in relation to that. We're also looking at environmental, social, and governance from a tangible assets perspective, and we will be publishing a paper soon on IVS, ESG, and tangible assets valuation. We're also dealing with long-term value. Out of Basel III, there came the concept of prudential value, or a sort of long-term value, a value that sits outside the property cycle and all the things that we see with coronavirus and everything else. So a consistent value over time, and we'll be looking at defining that, and we're in discussions with the EU in relation to that. Social value, so the social value that can be generated, and also a very topical issue at the moment, uncertainty and risk. We've been dealing with a lot of uncertainty and risk within our markets. And the final technical board deals with financial instruments. And financial instruments comprises of derivatives, loans, bonds, fixed income instruments, structured products, equity instruments, shares, and REITs. And we issued towards the end of last year and the beginning of this year a financial instruments exposure draft. It was very much viewed from the perspective of an entity. The first stage of the two-part consultation concentrated on governance and data, and it included specific consultation questions for stakeholders. And it's one of the things that IVS does. We very much insistent on having an open, transparent, and collaborative consultation process with all our members. And post-consultation, we also publish a basis of conclusion, which provides further details on the responses that we've received and any changes that the IVS has made as a result of those responses. A second consultation is due to be issued towards the beginning of next year. So in the next 5 months or so, and it will be looking at methods and models and reporting and controls. We've also recently issued a paper, an IBOR perspective paper in the first quarter of 2021, and we've held 2 round tables on valuation of financial instruments. Now, there is currently an IVS 500 chapter within IVS. It's quite high level and overarching. It will be subject to change, and please participate in our consultations. Our standards are only as good as the feedback and advice that we receive from our members. Now, earlier last year, we published an agenda consultation, invitation to comment. And what we regularly do is we go out to our members with our agenda to get their feedback and their advice. We see it very much as part of an open, transparent, collaborative standard setting process. And within the agenda consultation, there was a gap analysis, there were valuation topics and updates from our previous agenda consultations, and it was in consultation until January of this year. we did publish a basis of conclusion, and the main topics that we identified were automated valuation models, environmental, social and governance, long-term value, social value, uncertainty and risk, and data management. And we will be issuing more standards on this in forthcoming editions of IVSC. And we will also be issuing further perspective papers on these topics. You'll see from the consultation responses that they're pretty global, the amount of responses we get from around the world, but you might also notice that we only received 2% of our responses from India. Now, bearing in mind the size of India and the size of the population, and also having traveled around India as myself and been all around the country, I'm aware that each region is almost like a separate country in Europe. And so what I would try and encourage is further participation from India through ICMAI. Our consultations are only as good as the responses we receive, so please feel free to participate in any future consultations. And you can see here a list of some of the topics that we are considering over the next 5 years, and it's quite extensive. I'm not going to go through them all. I'm going to point out that data and data integrity and data management is a big topic in all our countries. Often the valuation is only as good as the data that we actually put into our valuation. I'm not sure where these red lines are coming from, but hopefully they're helpful to you. Internally generated intangibles is another very big topic. We've recently published a perspective paper on that. I'll share that with Dr. Gupta so he can share it with all of you and any other perspective papers that you'll be interested in. Also, prior to issuing the latest edition of the International Valuation Standards, which were issued at the end of July and included new sections on allocation of value and overarching valuation standard setting and valuation principles within the framework. And I could provide you a future presentation on those changes, if helpful, where I would go into them in detail. But we went to the market with our technical revisions and we received responses from the market. And on the basis of those responses, revisions were made to the standard. You can also see some other topics here: alternative investments, IBOR replacement, pension liabilities, recovery and resolution, trade-related properties, valuation funding adjustments, impairment for financial instruments, and insurance contracts. So you can see we have quite an extensive list. We're always willing to add to this list and take on feedback. We are very much an open process. And the final thing that I'd like to talk you through before answering any questions and leaving you to the rest of your wonderful conference is a little bit about perspective papers. So perspective papers are often a precursor to standard setting, where we will be going to the market and we will be trying to get views from the market in relation to the standards that we're doing. And you can see certain perspective papers here. This is a series of 3 perspective papers on goodwill. We've very much been talking with the International Accounting Standards Board about goodwill and impairment test for goodwill, and giving our feedback in relation to valuation, because their accounting looks more at it from a cost perspective. The accounting and the valuation need to meet. The economics actually need to match. And I'm going to just highlight here some other papers that we've recently published. At the beginning of the crisis, we did a paper on dealing with uncertainty, valuation uncertainty at times of market rest. That is still very much a relevant paper, and I would recommend that you all have a look at it. We've also looked at defining and estimating social value, challenges to market value, where there will be a separate paper coming in the series over the course of the next few months, ESG and business valuation, a framework to ESG valuation, and the recently published paper on internally generated intangibles. So that is a very quick overarching presentation on IVSC. As my colleagues will tell you, I can actually talk for hours and hours on this topic. So I'm happy to take any questions from any of you in relation to the topics that I've raised. And I wish you a very successful rest of the conference. And I thank you for your time. Shukriya, dhanyavad. I believe just waiting for Dr. Gupta to come back, but if anyone has any questions.
My name is Jitendra Rao. I am from India.
Hello, namaste, sir.
In the chart that you have shown, you said the responses are more from Australia and New Zealand, whereas it's about 13% there, while it is only 2% from India. So
yes.
Generally, I mean, what would be the reason according to IVSC, sir? What made Australia to have a bigger responses? Is it simply a proactive approach or something else?
I think it's just we're very much reliant on our member organizations encouraging people. And when we get responses, often the responses are from entire boards, etc., who have come together to look at it. But I would say that getting more responses from India would be extremely helpful to the development of the standards, both within India and to the development of the international valuation standards as a whole. To get more market feedback is only going to improve it. We do have Indian board members, and we're very much looking forward to Dr. Gupta's representation on the membership standards and recognition board. And this is one of the things that they will actually be looking at. How do we get more response from India? How can we encourage your participation? We need your participation as much as possible. But thank you for your excellent question.
Thank you, sir. Thank you.
So thank you so much, Mr. Alexander Aronson, for your deliberations and educating the participants regarding the scope and the standards work that IVSC is doing in all the different domains across different jurisdictions. And we assure you of our continued partnership with IVSC, especially in India domain now, since ICMAI RBO is taking the lead and I am also a member of MSRB. Hopefully we shall be able to actively participate in all the different activities of IVSC going forward. That's assurance from our side, sir. And thank you so very much for sparing your valuable time and joining us and sharing your deliberations with the participants.
Thank you, thank you. And I'll be very happy to provide a more detailed technical presentation in future if helpful. My Hindi's not great. I think maybe I say Aujo Fil Milenge, but that could be Gujarati. So my apologies if I've got it wrong. I thank you all very much and I wish you well with the rest of your conference.
Thank you so much, sir.
Thank you.
Thank you, sir.
We would now request Mr. Rajesh Kumar Gupta, Chief General Manager, Insolvency and Bankruptcy Board of India, who has been very, very cooperative, very supportive for providing guidance, direction for the operation, management, running of ICMAI, RBO, and all the other RBOs for that matter. But we have really been getting a lot of support from IBBI and particularly from Mr. Rajesh Gupta, who is currently looking after the work of RBO. Sir, we are grateful to you for your kind presence in this valuation standards conclave. We would request you to kindly share your perspective with regard to today's deliberations. Mr. Rajesh Gupta, Chief General Manager, IBBI, please.
Thank you, Dr. Gupta. Am I audible?
Yes, sir. Yes, sir.
Thank you. Dr. Alexander Armstrong, Director Technical Standards, IVSC. Shri Rakesh Singh, Chairperson, ICSI RBO. Dr. S.K. Gupta, MD, ICMAI RBO. My fellow valuers, Shri Ankit Goyal and Madam Padma Ganesh. A very good evening to all of you, and of course the distinguished participants. A very good evening and a warm welcome. I'm humbled to be invited as the chief guest in this valuation standards conclave, organized very aptly and at a very topical time by the ICMAI RBO. The fact that valuation is both an art as well as a science needs no reiteration. Of course, Dr. Gupta also is mentioning the same thing. It's an art as well as a science, and maybe it is more of a craft. I fully agree with Dr. Gupta on to those kind of a terminology being utilized for valuation. It is heavily dependent on the judgment of the valuation professional who applies his skills, experience, and competency in a stimulated environment to arrive at the most accurate value of an asset. However, it must also be kept in mind that such professional judgment becomes the most significant basis for undertaking crucial economic decisions by various market participants, such as granting of loans, enforcement of security, ensuring compliance with reporting requirements, levy of various taxes, taking strategic decisions, including mergers and amalgamations, approving or rejection of resolution plans under the IBC, etc. A wrong decision, as all of us are very well aware, based on an improper valuation judgment may be disastrous for the stakeholders in specific and to the economy in general. During the corporate insolvency resolution process, a wrong valuation or liquidation of a viable enterprise, both of which are equally detrimental to the health of the economy. It is well understood that the valuation of an asset provides an estimate of worth of that asset at any given point of time and for a particular purpose. This may not be the actual value of the asset, and the market may decide a different price for that asset, depending on so many parameters, permutation combinations, and situations which may be arising. What the valuer opines to be the value of the asset is merely an approximate estimate, which is arrived at by making calculations of various situations and parameters pertaining to the asset. It is a legitimate expectation of the market that the value opined by different valuers are in near range, and absence of which may create confusion and distrust in the minds of stakeholders. However, the estimate of valuation could be different if different players adopt different approaches, different methodologies for valuation of the same asset and in the same circumstances also. If every valuer estimates a different value of the same asset by using a different approach in the same circumstances, a customer may be worse off with a valuation, and the valuer who has arrived at such a valuation may find it difficult to defend his position. The market may question the ability of the valuers and the integrity of the valuation process itself. The market is already flooded with such situations where the conduct of a valuer is questioned whenever any transactions fall on the wrong side of the legal line or even certain perceived preconceived notions. Accountability and liability of the valuers may be severely restricted in such a scenario. Such situation is not in the best interest of the market, where various crucial economic and commercial decisions are taken on the basis of the valuation reports. Therefore, there is a need of having uniform and standardized approach to valuation, which minimizes the scope of differences between the valuation reports of different valuers, which may promote market integrity and respect for the profession. This is usually achieved through a uniform valuation standards the world over, which the valuers are required to follow while conducting the valuations. Apart from these stated benefits, the valuation standards also guide a valuer to explore into the new and hitherto uncharted territories, such as valuation of startups, digital platform providers, web aggregators, etc., where the assets may not be identified as in the case of traditional companies, as Dr. Gupta also was mentioning some time back. By enabling the valuers to value enterprises in such emerging sectors, the valuation standards discourage monopolization of valuation profession by a select few. Under the company's registered valuers and valuation rules 2017, a valuer is required to conduct valuations in compliance with the valuation standards notified by the Government of India. The central government has constituted a committee under the chairpersonship of Professor R. Ranayaswamy to provide recommendations on valuation standards. The committee has already submitted its report on asset classes specific valuation standards to the Ministry of Corporate Affairs, and it is expected that the government may notify the valuation standards pretty soon. However, till such time the government notifies these standards, the rules require a valuer to conduct valuations as per the internationally accepted valuation standards or valuation standards adopted by any registered valuer organization. In this block backdrop, I would like to urge the participants present today to actively and duly follow valuation standards in their conduct of valuation. The same should be explicitly and transparently brought out in the valuation reports prepared by them. Such a practice not only adequately informs the consumer of the valuation services, its constraints, but also enhances the credibility of the report and also provides certain degree of safety cushion to the valuer itself. With these words, I would like to thank ICMAI, RBO, and Dr. Gupta for organizing this conclave on valuation standards at an appropriate time. The conclave will help to raise consciousness of the valuers and stakeholders towards adoption of the valuation standards. I convey my best wishes for the session, and at the same time, I'd also like to thank Dr. Alexander for the kind of work they are doing in IVSC in terms of the few topics which they have chosen for future work, including things like the automated valuation models, the environment and social governance, the uncertainty and the risk management, etc., which I feel would go a long way in enhancing the credibility of the profession and setting up the valuation standards globally. Thank you. Thank you, everyone.
Thank you, sir. Thank you so very much, Rajesh Gupta, sir, Chief General Manager, IBBI, for your very, very wide perspective on the valuation profession as a whole, and also bringing it down to how the utility of valuation standards is very important for the entire valuation domain for the work to be carried out. Sir, we are highly thankful for your kind presence in this conclave, and we are highly encouraged by your words of encouragement and motivation. We assure you of our full cooperation from ICMAI RBO in all your endeavors to promote the profession of valuation and also do whatever is best in the interest of the registered valuers. Thank you so much, sir.
Thank you.
We now start the technical session where we have two speakers. I would like to invite the first speaker of today's evening, CMA Madam Padma Ganesh. Madam Padma Ganesh, please start your deliberations.
Thank you, sir. First of all, good evening to all the dignitaries present over here, and a warm welcome to all the participants, my fellow colleagues, all the participants who are attending this session. So this is about the valuation standards conclave. Before we talk about the valuation standards, it's just about the need to understand like from where this need has arisen. Now just before I start, I would like to say that I have not prepared any presentation on this. So I'll just be talking about this topic. So where does the need for this valuation standards arise from? So let us understand this chronology. Like firstly, with section 247 of the Companies Act 2003, this provided for the valuation by registered valuers. Now in line with this Companies Act section 247, later on, the company's registered valuers and valuation rules. This came into force on 18th October 2017. Now, as per this rule, the valuation rules shall apply for the valuation in respect of any property, stock, shares, debentures, securities, goodwill, or net worth of a company or its liabilities under the provisions of the Act or those rules like. The Act in the sense, the Companies Act 2013. So in short, the company's registered valuers and valuation rules 2017 was applicable to the valuations that would be taken up in the light of the Companies Act 2013. Now, in course of time, this application of these valuer rules, it extended to the IBC. So from with effect from 1st February 2019, by way of a circular issued by IBBI, it was directed that no insolvency professional shall appoint a person other than a registered valuer to conduct any valuation under the code or any of the regulations made thereunder. So this way, this registered valuers rules, it is applicable to all the valuations that are being conducted under the Companies Act as well as under the IBC code and its regulations. Now, in these rules, if you will just go through the Rule 8, which deals with the conduct of valuation, it is laid down in the Rule 8 that the registered valuer, while conducting the valuation, he shall comply with the valuation standards as notified or modified under Rule 18. Now, under Rule 18 of these valuers and valuation rules, no such standards have been notified as on date, like as our other dignitaries from IBBI and from ICMA RVO, as they mentioned, that they have submitted some report to the MCA and it is likely to be introduced very soon. But till such time, we are supposed to rather conduct our valuation on the basis of internationally accepted valuation standards or the valuation standards adopted by any RVO. Now, in our country, your ICAI has released the valuation standards. So the members of ICAI RVO would follow the standards set out by ICAI, or any other RVO, whoever is adopting whichever standards, be it the IVS or ICAI standards. So accordingly, it shall be applicable to each of those respective members of that RVO. Now for ICMA RVO, like we have adopted the international valuation standards. So as members of the ICMA RVO, like we are, at least I am a member of ICMA RVO. So if I am taking up a valuation, I am required to conduct my valuation exercise on the basis of the internationally accepted valuation standard, that is our IVS, International Valuation Standards, which is released by IVSC, that is the International Valuation Standards Council. So this way, our valuation rules itself has mandated the requirement that we need to adopt and practice the internationally accepted valuation standards in all our valuation assignments. So this is the first kind of importance which is granted to the valuation standards. So when we think about the importance of the valuation standards, the first thing that would come to the mind is that it is mandatory. Like you have to follow the valuation standards, be it the IVS or be it any other standard which is adopted by any particular RVO. So some valuation standards will have to be adopted in conducting the valuation assignments. So that gives it the first importance. Now, other than this, if we talk about like why we need to adopt these valuation standards. Now, as Mr. Gupta was saying, Mr. Rajesh Kumar Gupta, sometime back, that if the valuers, if two different valuers with the same kind of data inputs, if each one of them is going to adopt, say, different approach, different method, and if there is no consistency in the practice that is being adopted by them, then that is likely to give very divergent value. And this kind of a divergent value that makes the user, lose confidence in this profession. So in order to bring some uniformity in the practice, in the methods, the approaches adopted, so to bring in some uniformity in the approaches and as to serve as a guidance to the valuers so that, they are able to follow the same set of principles so that they don't end up giving very divergent values, and that at least it should be within some acceptable limit, if at all there is some divergent value. So to bring in that uniformity, we need these valuation standards. And the other thing could be, you need to instill a sense of trust in the users. Like if there is no trust in this profession, then who will rely on these valuers and who is going to give them work? So how is this profession going to grow? So this kind of evaluation standard ensures that the trust and confidence of the stakeholders of these valuation opinion and valuation reports, that is continued and it is boosted. In order to maintain that kind of a confidence, we need to have a uniform set of valuation standards, and that too, so in order to establish a kind of transparent and consistent valuation practice. So to bring in this kind of a streamlined process in the valuation exercise, we need this valuation standards. I'm talking about even in the importance, like what is the purpose of valuation? What is the purpose? Like you may say individually, you can say maybe for issue of shares, maybe when there is some acquisition of minority rights, or say under CIRP, under liquidation process. But these are all the individual purposes. But what is the broad purpose of any valuation exercise? It is used to assist in the decision making mainly. The valuation is done to assist the user in his decision making. So that is why it is a very important profession. And unlike like other professions we have been practicing, like we are all CA or CMA or company secretaries, we have been carrying out our profession. But when it comes to this valuation, it is something which guides the user and assists him in his decision making. So that is the primary purpose of valuation. And then beyond that, you may say under Companies Act Section 62 or whatever IBC, CIRP, those are all the secondary purposes of it. But the primary purpose is to assist the user in decision making. So keeping that in mind, the valuer has to understand that whatever value opinion he is going to give, that is going to influence the user. He is going to take a decision based on it. Somebody may make an investment based on this valuation report. If somebody is being given an exit, you are going to value what will be the fair value so that he is given an exit based on that value. So it is all something which is of very prime importance. There is a lot of legal aspects surrounding these kind of transactions. So this is all the kind of importance that is attached to this valuation exercise. So we need to have something to guide the valuers, because or else it will just become something like you're just let loose everything, and then people are all adopting their own choice, whichever approach, method, whatever he wants to do. So if it happens in that way, then there won't be any control on this profession, and the kind of value that is likely to be skewed, and it will not really assist any user in his decision making. So this bearing in mind this primary purpose of valuation, which is decision making, the valuer needs to understand his responsibilities, and accordingly he needs to adopt and read and understand the valuation standards, like whichever be it the IVS or be it the ICAI valuation standards, whichever he is required to follow. He has to really read through all these standards and understand and adopt in his practice. Now, other importance, like what else could be the importance, like why we need the valuation standards? At least it indicates like what the business is doing exactly. Is the person who is running the business, is he taking it in the right way, or is it really not doing well? So this kind of his position, like he comes to know like where he stands. So for that purpose also, it assists a particular business owner, so that he can really take a stock of where he is headed to. Is he going right or is he going wrong? And what corrective measures he need to put in place before it really slips into something very in a distressed position. So it alerts the business owner about what he has to do and what corrective steps he needs to take. Now, the next importance arises from the fact that it helps to measure the progress. Like he must have started at scratch initially when the cash flows would have been say negative, and then slowly is able to build it. So this kind of it allows a performance measurement. So the business owner, he can understand what progress he is doing. Maybe even the lenders, the financial institutions who may have lent money for that particular business, they can also measure what progress this business has been doing over a period of time. So for that purpose also, we need to do this valuation, and we need to have uniform valuation standards. Now it helps in the management of the business. It also helps the business owner in the course of action for the future. Like he can just see like what future areas he could tap, and accordingly he can just see like what all expenses would be involved in it, how much cash flow it is going to generate. So this kind of a course of action for the future, it helps the business people to understand what they should be doing, so that they can choose a proper course of action for the future. Now, it helps to track the effectiveness of any strategic decision making process, and also the performance, maybe not just in terms of revenue, but one can also understand what is the estimated change in the value. So all these added together, these lay a lot of emphasis on the use of valuation standards. Now, to best understand the importance, I would just like to give you some practical examples. Like you have these general standards and asset standards. The general standards, they range from 101 to 105. Like 101 deals with your scope of work, 102 investigation and compliance, 103 it guides the valuer about how the reporting should be, then 104 basis of value, and 105 valuation approaches and methods. So these are the general standards which are applicable across all asset classes. So every valuer should be thorough with these general standards so that he can adopt them in his valuation exercise. Now, to just emphasize the importance of these standards, like why you need to understand. Now, as I said, I'll give you practical examples. These are all related to the judicial pronouncement which have come up in IBC cases as well as in Companies Act. So once you understand these judicial pronouncements, you will know why these standards are important to be complied with. In a particular case of IBC, in the case of a ICICI Bank versus Unimark Remedies, which had gone into the corporate insolvency resolution process, the valuation was done, and as mandated under the CIRP regulations, 2 valuers were appointed. And in this particular case, the issue that happened was both the valuers had assigned a value of 0 to the intangible assets. And this being a pharma company, intangible assets form a major part of their balance sheet assets. So how could the value be assigned as 0? So the minority financial creditor, Corporation Bank, they've filed an application with NCLT Mumbai stating that the valuers have not done a correct job and they need to be replaced, because in the last financial statement, the intangible assets value stood at some 200 odd crores, and now these 2 valuers have assigned it the value 0, because of which the value of the corporate debtor has eroded considerably. And because of this reason, this objective of the code, that is the maximization of the assets, maximization of the wealth of the corporate debtor, is not met. So this was the plea which was put forth by Corporation Bank. So when this case has a kind of a long history, because when it was taken up by NCLT Mumbai, we have 2 members, 1 member judicial and 1 member technical, and there was dissent among these 2 members. Like one opined that yes, the valuation is heard and we need to appoint another valuer, while the other member stated that there is no such provision that we can doubt the valuation given by the valuers and appoint another, and that will also frustrate the timeline process. So there was dissent among the 2 members, and then the matter it went to NCLT president, and NCLT president then sent the case back to another member judicial of NCLT Mumbai, and then she took up this case once again on fresh terms. Like first she noted whether they had the powers to really appoint another valuer, and when it was concluded as yes, she went on to discuss this valuation report. So when you will see how the NCLT member has discussed the valuation report, you will understand the importance of 2 valuation standards in this. One is in relation to investigation and compliance, that is IVS 102, and the other would be with the valuation of intangible assets, which is covered under the asset standard IVS 210. So when this report was examined in detail by the NCLT member judicial, she observed that both the valuers had based their valuation at 0 on the basis of a warning letter issued by US FDA for some non-compliances in their 2 of their plants. Since they had 2 manufacturing plants, one at Bavla and Vapi, both in Gujarat, and there were some non-compliances with respect to those plants. Sir, could you please mute yourself, Mr. Arumugam?
All the participants are requested to kindly mute yourself, please. Thank you.
Yeah, thank you. So the particular corporate debtor, they had 2 units in Bavla and Vapi, and the facility, these 2 plants, it was just one among 6 across the globe. Like it was a very unique facility they had for one particular kind of drug. So the financial creditor who filed this application, they contended that it cannot be that with this kind of facility and with the corporate debtor doing good business in the CIRP period, how can the value be 0? So when the judicial member, where she took up the valuation report, she observed that it is based on the warning letters that they just assigned it 0 value, and that they felt because of these warning letters, US at their end could impose an import ban, like at their end, an import ban from India of these of imports from this company, and this could affect the revenue of this company, and so they assigned the value 0. But the member opined that that would be only with respect to USA. But what about other countries? The exports to other countries could continue, and it's not as if these were not rectifiable non-compliances. These non-compliances which were pointed out by US FDA, if they were rectified, then they could do business once again. So that was not an issue. So that could not be called as a closure of that business itself and then giving a value of 0 to the intangible assets. And they should have critically examined the warning letter and not just gone by the plain reading that warning letter, okay, fine, so assign it 0. So here, the valuers ought to have, adopted the valuation standard IVS 102 in principle and practice, both. Like they should have really gone through the inspection. They should have analyzed and critically examined the warning letter. They should have seen like what best could have been done, maybe to comply with those, like what cost could have been involved in that. So all these matters ought to have been examined by them under this IVS 102, but was not carried out. And they just gave the value 0. So NCLT observed that the valuer had really erred by not critically examining the warning letter when they ought to have done it. And further, they also went on to discuss that the valuation reports did not discuss any approach or method. Now, our IVS 105, that is also another standard which we have to really adopt in our valuation. We need to discuss all the valuation approaches and some possible methods under them. And then you need to give your conclusion on why you feel that a particular approach and a particular method is best suited for that subject asset. So this kind of a discussion has to be incorporated in your report. That is what your IVS lays down. Like even in your reporting part in IVS 103, like principal reasons for conclusion, that is a requirement in IVS 103, and under IVS 105 also you have to discuss all the approaches and the possible methods, and then you give your value conclusion based on the method which is best suited for your assignment. So this kind of a discussion about the approaches or methods, nothing was given in that report, and just based on that warning letter, the value was given as 0. So the NCLT ruled that this valuation is erred, and this kind of a report assigning a 0 value is completely untenable, particularly in the light of the objective of the IBC code, which states that the objective is to maximize the assets of the corporate debtor. But this is only leading to erosion and not the kind of professionalism that is expected of the valuers. So for this particular case, the NCLT member, they went ahead and they ordered that a third valuer be appointed for the limited purpose of valuing the intangible assets. So here you can see that you had the valuers, both of them, had they gone through the IVS 102 compliance, then 103 giving the reasons for conclusion, then 105 about your selection of a particular approach or a method, then maybe this kind of a blind assignment of 0 would not have happened. They would have gone in depth and they could have analyzed the letter, they could have critically examined the warning letter, and maybe the work could have been more professional rather than just giving this kind of a value. So here, like, you can really see the importance of following your IVS. Like if you are getting an assignment, we need to really see Have I done my necessary homework with respect to the investigations and compliance? Have I analyzed? Have I inspected the records? Have I obtained all the documents? Have I done all my calculations correctly? So all these checks will come in place once you are adhering to the standards. So it is for this purpose that these standards have been made, so that it is a guiding force for you. Like you have to, it is like your holy book. It say that we say that our holy books, they are a way of our life. It is not just something to be kept in one side and just offered flowers on it, but it's a way of life. So likewise, the valuation standards, you have to live it as your way of life. As our other dignitary said, you have to eat valuation standards, you have to drink valuation standards, you have to breathe valuation standards. It is just like that, that one needs to put it into practice in his function. Now, there are many more such examples where you can see how these standards, following these standards can really help a valuer, because the legal liability of a valuer should also be understood by the professionals who are working in this field. Now, in another CIRP assignment, there came a question of valuation of land, that is in the case of Solidire Limited. The IBBI appointed valuer, I mean the registered valuer, he had assigned a value of some few 30,000 rupees something, 30,000 odd rupees, whereas the plot was supposed to be having a market value of some 18 crore plus. So in this case, the financial creditor, that was Indian Bank, they filed an application in NCLT Chennai stating that the market value is around 18 crores. And even decades ago, when we had funded this corporate debtor, some 3 decades back, even that time it was a few crores, and now this valuer is giving just some few 30,000 odd rupees. So we want to replace this valuer, and they approached NCLT Chennai. But without just saying that the valuer has earned, that doesn't help. They need to substantiate how he has earned in his valuation. So NCLT gave them an opportunity that you get one more valuer appointed from IBBI. You do the valuation and then you present to us, and then we will examine what it is. But as it would be, Indian Bank approached IBBI, but it is mentioned in that order that IBBI declined their request, stating that only upon the adjudicating authority asking them or directing them to appoint a valuer, or the RP requesting them, can they appoint another valuer, and they cannot appoint one valuer for this purpose. So Indian Bank went ahead and they appointed their panel valuer, like they had a panel of valuers within every bank has. So they got their panel valuer to do the valuation, and that valuer gave a market value of liquidation value of 18 crore rupees, whereas the registered valuer appointed by the RP gave 30,000 odd rupees as liquidation value. So when this valuation report was examined by the adjudicating authority, they found that the land was actually assigned to the corporate debtor by the government of Tamil Nadu. It was on assignment basis, like they could not create any third party rights and they could not make any alienation, and it had to be used only for the purpose for which it was assigned and not for any other purpose. So these were the conditions of the assignment. And further, at any time, if the corporate debtor were to hand the land back over to the government of Tamil Nadu, what they would get in exchange would be the same assignment value which they paid some 3 decades back, that is the 30,000 odd rupees. So it was on that basis that the registered valuer appointed by the RP had valued it at this 30,000 odd rupees. Whereas the bank's panel valuer, he did not go into the details of all this, like that the corporate debtor did not hold any ownership rights, that the corporate debtor did not have any leasehold rights, they could not create any third party rights, or no alienation could be created on that property. The valuer did not go through all these details, and he just went by the market value assigned in that area, like what was the prevailing market value in that area. So to that extent, here, if you will take this situation, the valuer appointed by the RP had done his exercise correctly. Maybe he carried out his investigations and compliance under 102 correctly. So he applied the correct method, like whatever the assignment value, that again, that only that will be got back by the CD. So he used the correct approach. Whereas the other valuer, he had not gone into all these investigations and compliance, and he just went by the market value without looking into the title or the other details of this particular land. So this is also another example where the valuers need to be careful in conducting their valuation. There is also one case in the with respect to the valuation of shares, wherein the exit value was worked out in respect of one particular shareholder, and in this case, both the shareholder and the company, they were both agreed, and they both filed. Initially, it was filed with the company law board when this valuer rules and the NCLT had not come in place. Initially, it was with company law board, and later on, this case got transferred to NCLT Chandigarh. This is the case of Ravindra Maghu versus AMA Enterprise. So in this case, both of them alleged that the valuer had not done the valuation correctly, that even the valuation date was not adhered to as laid down by the court. They have not adopted the proper method or approach and so on. But when the NCLT examined the report, they found that the valuer had discussed 5 methods under the different approaches. She had discussed 5 methods. She had even weighed the pros and cons of each of these methods. And finally, she had concluded upon one particular method which was best suited to that assignment. So here, the valuer had adhered to the standards properly, which was in place at that time. At that time, though, it was not about following your valuation standards, but corporate affairs standard. But whatever was the standard, that was adhered to correctly by the valuer. So you can actually see how the legal liability arises for the valuation reports that we give. Like anybody who is aggrieved, he is likely to challenge. So once this happens, we should be in a position to defend our valuation. And how will we be able to do it? Only by following all our standards correctly, and it should be in place. Like we should be able to document like what all standards you have followed. In fact, we are required to report in our valuation report that the valuation standards that have been adopted by us. Like you need to list out what all you have followed. So based on that, you have to keep your documentation in place so that you can defend your valuation. So you can see how this valuation standards, they can assist you in defending your valuation if you follow it correctly. So we need to bear these judicial pronouncements in mind. In fact, if you go through the international valuation standards, you can see how it is laid down in the standards itself in under the IVS 105 that the valuer, he should have the sufficient competency, he should have a good knowledge of the regulatory framework or the law for which he is carrying out the valuation, and he should also have a good knowledge of the case laws surrounding that particular assignment. So when IVS itself is stating that, it is stating that in under IVS 105, and you can find this in all the asset standards, like how they are stating that the valuer should have sufficient knowledge of the case laws too. So once you have this kind of a guidance, like you won't go astray, and you will be in the line of the correct valuation, and you will be able to justify whatever you may have done in your assignment. So we need to understand that the importance of the valuation standard lies in this fact that it helps us to defend our valuation when practiced correctly. So this is about how you can really put this into practice. So that is why I just picked up these to make it understood better, like you can understand it better. And sometimes it can also happen that you find some difficulties in valuation, like you are told that you have to adopt the valuation standards in carrying out your valuation. You have to go by the basis of value. You have both the IVS defined basis of value, you have a non-exhaustive list of the non-IVS defined basis of value, then you have the premise of value. But in your practical assignment, you may come across a situation where the actual standards, the valuation standards that you're required to comply with is contrary to the particular regulatory framework under which you may be required to carry out your valuation. Like this could be a practical difficulty. So this is what like we call as departure under IVS. Like IVS has also tackled this kind of a situation. It is called as a departure. So departure in the sense like it is a situation where some specific legislative or regulatory or other authoritative requirements need to be followed, but those requirements differ from the requirements as set out in the IVS. So these are called the departures, but such departures you have to handle them, and in the sense that the valuer has to comply with the legislative requirement for which he is carrying out his valuation, the legislative or the regulatory requirement, and this kind of a departure will be considered to be in compliance with IVS. Like that the departure has arisen on account of compliance with certain regulatory or legislative requirements, it will be treated as compliance with IVS. So the valuer can still go ahead and he can mention in his report that the valuation has been performed in accordance with the IVS, like though there may be departure in that particular circumstance. But one has to remember that this departure is allowed only with respect to the legislative and regulatory or authoritative requirements, and such requirements will take precedence over the IVS requirement, and the departures which are not a result of the legislative requirements, that will not be permitted when you want to state that you have carried out your valuation in accordance with the IVS. So the departures with respect to the legislative and statutory requirements will be allowed and not otherwise. So this will have to be borne in mind by the valuer. Now another difficulty which is very current in the current scenario is the valuation in your COVID times. So for this purpose, as Mr. Alexander also pointed out, they had released a paper sometime in March 2020 about dealing with this COVID situation, like that is titled as Dealing with Valuation Uncertainty at Times of Market Unrest. So they have released a paper, and also our ICMAI has also released a guidance note with respect to the valuation in times of COVID. So like both these can be referred to whenever you're faced with a situation about valuing in this COVID situation, where you find that the particular subject asset that you're valuing, if it is showing a lot of variation from what its historical trends were. So there you may adopt these the perspective paper, I mean that paper which was issued by IVSC, as well as the guidance note which is issued by ICMAI RBO. So in the IVSC paper, actually, they have brought out the difference between the valuation uncertainty and market risk. That we need to understand this difference between market risk and valuation uncertainty. What this COVID situation is causing right now, that is a valuation uncertainty. We cannot call it as a market risk, because risk is something which the person who is taking that risk, he's used to taking those risks and he knows that in advance, like what he's putting his hands into. So that is what is the risk, and uncertainty is something which is unpredictable, which is, it could be any, like this was so unpredictable what happened in the last 1.5 years. So this kind of a principle has to be borne in mind. You can go through that document, which is available in the IVSC website also. So that can serve as guidance for you to carry out your valuation in times of COVID. But even in that paper, they have mentioned that sometimes now, because of this COVID situation, some local governments could have put some restrictions on movement, because of which maybe the valuer, where if he needs to even carry out the physical verification, he may not be in a position to physically visit that place and carry out the verification. But in such cases, like what about compliance with IVS 102? So in that situation, what that paper states is, it will be the professional's call, like how well the value opinion is likely to be affected by his not being able to adhere to that IVS 102. So if he feels that the value opinion is going to be largely impacted, then he should better decline that kind of a limitation. And in no case the valuer is allowed to then mention in his report that we have conducted the valuation in terms of IVS 102. So this is what that paper clearly states. So if you have some restrictions on your movement because of which you are not able to carry out your physical verification, then in such a case, the valuer should take a call, and if he is carrying out some other desktop valuation or something, then he need not say that, like if he is not complying with IVS 102, I won't say desktop valuation. If he is not able to comply with the investigation part as made in IVS 102, he should not say that it has been conducted in compliance with IVS 102. So this has to be also taken into account by those who need to do the physical verification, because if you will see under CIRP, it is very under CIRP regulations, they are very clear that the tangible assets and inventory valuation that should be physically verified. So when that regulation is clearly mandating that the physical verification needs to be done, so you have to accordingly abide by your IVS 102, and then you may carry out your assignment based on that. So that is about the other kind of difficulty which the valuers could be facing. Now moving ahead, as Mr. Alexander pointed out, there are some emerging areas like your ESG, then your social value, or the personal property, valuation of personal property. So all these are some emerging areas. So I will just talk about among the emerging areas, I would like to talk about the social value. Like social value is what would be generated by the social assets. Social assets in the sense like these could be owned by the government or a charitable trust. It could be like owned by a for-profit or not for-profit organization. Both are possible. But there is some element of benefit being passed on to the users in this computation of social value. Now, so far, IVSC has released a perspective paper on social value, but we don't have any standards as such. So, whatever valuation could be done in these areas, they could be inconsistent across the markets. So, to streamline that, actually, they need to come out with a valuation standard, and they, as Mr. Alexander said, they are working on it, and maybe we will be getting standards on the computation of social value also. But the important aspect under the social value, if you will see, what are the main components that are involved in it? Like one would be the cost to the asset owner, the monetary cost involved to the asset owner. One would be the benefits that arise to the user of the asset. There could also be benefits that could arise to the non-user of the asset. So these would form the main components of your social value. Like say if there is a metro line which is laid down, now it involves a cost to the owner of the asset. Say if it is owned by the government, it involves a cost to them, cost of laying, operating, running. And if they are offering those tickets at some subsidized rates, that subsidy, whatever they are offering, that is also a cost to them. But the user of the asset, the people who use that metro to travel, that is a benefit which has arisen to the asset user. And in what form does it benefit the non-asset users? So maybe all the people who are living along the track of that metro line, those people or small businesses there, they could be benefited. Like the business could be benefited because people are able to commute to that area now. So the economic activity increases in that area. So that adds value to the business. And what about the people who are living there? Maybe the flying of vehicles that release your gases, I mean the harmful gases into the air, that is reduced because of this metro. So they are able to breathe fresh air that improves their quality of life. So their visits to doctor reduce. So that is adding a benefit to them. So how to compute all these benefits in monetary terms? How to give a value to this? It is okay to compute the cost to the asset user, maybe whatever he is foregoing by way of subsidy or whatever cost he may have incurred in that particular social asset. And the benefit to the asset user also directly you may come to know because of the subsidy which is being provided to them. But the non-asset users who are benefited, like how to take a count on the number of these non-asset users, how to compute the benefit that may have arisen, like that is a very challenging task because all such people, all these can be done only by means of some survey. One will have to do maybe a door-to-door survey, household-wise and the business-wise. Like, did they see any change prior and after that metro? And what is the kind of expense that they have saved on? Did their trips to the doctor cut down? Did they save on such medicines and the doctor's bills? So all these, putting a monetary value to all this and computing the social value, all this we will need to have some proper standards in place so that it can be uniformly done. Because it's not as if it would just be in one place and just one particular valuer will be doing this kind of an assignment. So we need some uniformity in principles. Now this is just about, say, some infra project which is relatable to a government agency. But if you take maybe even some philanthropic projects which are done by the corporates, say some corporate is conducting some training in a village to the farmers about the use of the modern technology, maybe IoT, how they can water their plants, just staying at home and things like that. So they want to impart some training to the farmers. So say 10 farmers are attending it. So how to compute the social value in this? So the farmer, if instead of working on his land, if he has come here and he has attended the training, say 1 hour, 2 hours, so what is the cost involved for him? Like, he has foregone some wages there, some earnings he has foregone there to attend this. And what will be the benefit that he is going to gain in future? So all these, these are all very subjective things, like how to assess and how to put a value on this. But nonetheless, the corporates are interested in really understanding what their return is on the investments, on their investments on such projects. Like if somebody is providing some drinking water facility, or they are going in a village and teaching the children about the hygiene aspects. They teach the children, say, to wash hands frequently. And then looking at some child, maybe the neighbor also starts that. So this kind of hygiene project is on. So how to put a value on this? So maybe that they will give you some feedback stating that because of following this hygiene practice, our doctor visits reduced. We are more healthy now. So we are spending less on medicines and such things. So maybe these could be a type in which you can compute the value, the social value. So to measure the social value, we have some methods in place like social return on investment and all. But maybe a more standardized procedure will help the valuers. And these kind of assignments, these could be more in the game, like once the things are standardized and they are all the perspectives are put in place. Now, similar to this social value, you also have the personal property. Now, in personal property, that covers, say, the arts, paintings. So all these types which are owned by an individual. So for this type of this arts, painting and all, like you need to have you need to understand that there could be a primary market for it, wherein it is coming straight out of the artist's place and maybe sold for the first time, or if it is offered purchased once and then resold, maybe that's your secondary market. So we need to understand the kind of market it operates in and what would be the types of value under which it can be valued. Say your benchmark value, they have something called the appraisal value. So on this topic also, the IVSC has released a perspective paper regarding the valuation of personal properties. But what at present, as per that perspective paper, what they feel is they don't need to issue any fresh standards on this, because the valuers can very well adopt the general standards for the valuation of this personal property. So likewise for the agricultural properties like IVSC perspective paper, it says that though the agricultural properties are different from the real property, like the real property, it could be just with respect to your commercial or residential use, but agricultural property, it will differ in the sense that here you have to consider your land, maybe whatever improvements that may have gone in the land, the agricultural produce, maybe the plant and machinery which are attached to the land or not attached to the land. Like if it is a processing unit, it is likely to be attached. If it is just with respect to your mechanical plowing system or something, your tractor or something, those are not attached to the land. Then your biological assets, attached to the land, say your plants or your animals, livestock, which are not attached to the land. So all these and the agricultural produce, all these would form part of your agricultural properties. But here, though there are inconsistencies in the valuation across the market, but still IVSC in their perspective paper, they have stated that like one could adopt these general standards and say if the agricultural property is related to land and building and such factor, then the valuer along with the general standards, he needs to adopt the real property interest, real property, that particular standard. If it is concerned with some plant and machinery, plant and equipment standard also needs to be adhered to. So this is what the perspective paper has laid down as at present. And so for these emerging areas like your personal property, agricultural properties and social value, if we have a guidance note or maybe a dedicated standard, it would definitely help the valuers, because of late, like even in your CIRP, I do come across in the groups where people are asking, has anybody done valuation of trees? So how to do the valuation of trees? So this kind of a valuation, if there is some guidance note or some standard, it will assist the valuer, to give a more uniform, by adopting a more uniform method or approach. So there will be some consistency among valuers when they carry out their valuation. Now coming to the Indian scenario, now as regards our the mandatory requirements for which the valuer services are required, the Companies Act, okay, fine, we are doing all the financial instruments basically over there or the business valuation. But for the CIRP process, we don't have any separate class of valuer, say for your gems, jewelry and precious stones. We don't have any separate class of valuers. We don't have any valuation standards also to cover this gems, jewelry and precious stones. So a dedicated standard to this gems, jewelry and precious stone would be welcome, be it from IVS or whatever our government is working on. So if they can bring out a standard on this particular class of asset and which class of asset would be, competent to carry out that valuation. So these are two issues maybe that need to be dealt with for our Indian scenario. And also, as I said, with respect to the valuation of trees, your livestock, say your dairy farm, your poultry farm. So all these valuation, if we get some guidance, like your quarries, your extractive industries, these are all areas like which have not been touched by the specific standard. Those in some perspective papers, the IVSC opines that you may follow the general asset standards, and that should sufficiently take care of it. But still, maybe some guidance note would help in that event. And if our own government is able to bring out some asset standards, I mean the valuation standards on these class of assets, like your extractive industries, your plantations, your specifically your trees, your livestock, like there can be something which is into dairy farming. A company could have gone into CIRP, which is into dairy farming, or poultry farms that could have gone into CIRP. Now, how to really carry out the valuation in these cases? Like what should be the approach or method, so as to have something uniform? Like it has to be uniform so that the two valuers don't give very divergent value opinion. So it is for this reason that it necessitates this kind of guidance note or a standard. And whatever standards may be released, maybe by our country, keeping in view the requirement of this gems, jewelry, and this other, the new class which is really coming up in our CIRP valuation, it has to be, of course, consistent with our legislative and regulatory requirements. So that is one thing. Those standards need to be consistent with that. So how to go ahead with all this? That is something which will have to be dealt with. So this is just a request, like on this platform, if the if those in power, if they could get through this message, and if it is taken forth, like your one would be your social value. Like social value is of importance, just like your ESG. ESG is another thing, and the social value, because the corporates are interested in really finding out what is the social value with respect to the investments that they have made in that projects. So how a guidance or some standard on the social value, then your gems jewelry, your agricultural properties, maybe including the biological assets also. Yes, and when we talk about the biological assets, you can also have a situation where that could be the cultivation of the virus for the purpose of developing a vaccine. So even that could form part of your biological assets. So how to value in that situation? So all these are new emerging areas which are not there in the current system, but which could be dealt with. So some guidance on this, some standards on this would be really welcome. So with this, I would like to close this my presentation. I mean, my part of the topic.
Thank you very much, Madam Padma Ganesh, for a very elaborate deliberation presentation on the basics, the characteristics, the objectives of valuation, and you have very clearly brought about the importance of valuation standards by giving real-life case examples from IBC cases, 2 cases that we discussed. And your innovative thought about the social capital valuation and also about the thought of how to bring about the ESG framework within the valuation are very hugely welcome, and definitely we shall be working on that together, as well as now that we have a representation in India on behalf of the IVSC, we shall also be able to pursue this agenda very, very vigorously in association, of course, with all the other RVOs that we have, not only our members, but the RV fraternity as a whole. There are about 4,200 RVs in the marketplace as of today. We consider everyone as our member in the sense that our primary social responsibility is to develop the profession of valuation. Be someone, be our member, or maybe he could be a member of any other RBO. End of the day, we are all working towards development of the profession of valuation within India. Thank you so very much, Madam, for sparing your valuable time and giving very, very new perspectives to the whole issue of setting up of the valuation stand.
Thank you.
At this point of time, we have already been talking for about 2 hours. I propose a 5 to 7 minutes break before we have the next speaker on, Mr. Ankit Goyal, Chartered Accountant and Registered Valuers. He'll be picking up the topic and then talking about to you for the next speaking slot. But let's have a 5 to 7 minutes break at this point of time. Thank you so much. So after 5, 7 minutes, we join back again. Maybe you can stay tuned. There's no issue at all. But the next session will begin in about 5, 7 minutes time. It's kind of a tea coffee time. Yes. Thank you.
Meanwhile, can I ask one question from Madam Padma Ganesh, please?
Sure, sir. Sure, sir.
Yes, sir. Yes, sir.
Madam, you were citing 2 cases of IBC.
Yeah.
And in one case, you said that the rights, if they were to be returned back to the lessor or the assigner, the valuation would be 0 and it was upheld by the NCLT also.
No, valuation was not 0. It was the assignment fees.
Yes, whatever. I mean, the assignment was, the value was taken as to be 30,000 rupees, if I'm not wrong.
Yeah.
Correct? Now,
Yes.
my point is, when then CIRP, the resolutions are done and the mining cases are transferred, even though the original terms and condition of the mining leases are that they had to be returned back, but when resolutions are there, they get shifted to the resolution applicant also. And by virtue of that, even in that case, it would have been shifted. One will have to pursue it sooner or later, and it gets shifted by virtue of the inherent right in that. And from that perspective, how far you think that kind of valuation was correct?
You mean in the case law, how it was correct?
Yes.
So that was based on the terms in which the assignment happened. And that is what the NCLT has ruled in that case. So the terms of assignment were such that if at any time they returned back, they would get only the assignment fees, and the company had no other rights attached to it. They did not even have the leasehold rights as such. They only had the right to use it for the purpose which they stated. So that was one thing, and they could not. There was no third party rights could be created, no alienation allowed. So that being the case, this was the only thing that would be returned back to them if at all the land were to be returned to the government. So this was based on the terms of the agreement with the government of Tamil Nadu, based on which NCLT Chennai has ruled in that manner. Now,
No,
actually,
you are
have the details, no?
you are right. What I'm trying to say is that in this kind of scenario, the resolution becomes all the more easier in the sense that if something is available at 30K, the person who is going to buy, why would not he buy 18 crore rupees of asset at 13K, and why at all it needs to be returned back? If at all it has to be given to, it has been given to me and it is under CIRP and there is no resolution visible, 18 crore product is a land is available at 30,000. So it never goes back to the authority, even if that agreement is there. Sooner or later, you fight it out in the court and there would be lined up buyers for this kind of asset. You find a buy it and land up in the court, and at the end of the day in Supreme Court you will get it, even if you don't get it at the lower levels or at NCLT level or 80 level, but you will definitely get it. That is why it has come for resolution here. And if one, and I don't know what was the ultimate fate of that case.
That even I am not aware of, but I don't think it was challenged further because we are not getting any details about it. At least I didn't
So
get. I searched
was it liquidated in that case? That case was liquidated or it was resolved?
I think it had been resolved. The final liquidation value on IBC site, I checked, it came to something like 6 crores.
Very strange. I mean, I am not aware of, so need to go through that, but I'm finding it very strange that this cannot be transferred. Those rights cannot be transferred to the new buyer. When the mining leases also go to the new buyers. Anyhow, thank you very much.
Yes, sir.
Thank you.